Okay, let's dive right into this. Welcome to our rapid-fire explainer of Netflix's Q2 2026 earnings. Look, as financial analysts, we just want the raw facts, right? The numbers, the strategic pivots, absolutely zero fluff. So we're going to look straight at the receipts today to see exactly how the streaming giant is navigating this highly competitive battlefield right now. Starting right at the top with their top-line health, Q2 revenue just hit a massive $12.6 billion. Honestly, that's a really solid 13% year-over-year growth, landing perfectly in line with their previous guidance. They're basically sustaining this healthy expansion through a mix of membership growth, some strategic price adjustments, and of course, their rapidly scaling ad tier.
But, it's never just about what comes in, it's about what they actually keep. Net income came in at a staggering $3.4 billion for the quarter alone. Meanwhile, diluted earnings per share, or EPS, hit 80 cents, which actually slightly beat their own internal forecasts. So profitability is definitely expanding here, and those margins are looking incredibly healthy.
And the trajectory here, it's just undeniable. Revenue took a real leap from $11.07 billion back in Q2 of 2025 up to $12.56 billion in Q2 of 2026. And it's exactly this kind of consistent, predictable growth that's allowed management to confidently narrow their full-year 2026 forecast down to a very tight $51 to $51.4 billion window. Okay, but let's look under the hood for a second. To gauge a company's true resilience, especially in a notoriously cash-burning sector like entertainment, we really have to examine the official consolidated balance sheet. You can think of this as their ultimate financial scorecard, directly tracking their liquidity versus their liabilities. Now, contextualizing their debt is absolutely key here. Yes, they are carrying $14.4 billion in gross debt, but you've got to compare that to their $9.1 billion in cash on hand. Then add in a really robust $1.5 billion in free cash flow. That's essentially the pure cash left over after paying all the bills generated just this quarter. So they have more than enough liquidity to easily manage those obligations. In fact, Netflix is so incredibly confident in their capital structure and cash generation right now that they just executed their largest quarter of share repurchases ever. They bought back $4.7 billion in stock. And get this, they still have a massive $27.1 billion left in capacity. They are aggressively returning excess cash straight to their shareholders.
So, the crucial point is, where does the company actually go from here? What new projects are going to fuel their future growth and justify these massive valuations we're seeing? The streaming wars are maturing, so the traditional playbook, it definitely has to evolve.
Well, let's break down those new value engines. First up, live events. In a pretty fascinating twist, they're actually spending about 5% of their budget here, but it only gets them about 1% of total view hours. Yet, live events like the NFL and WWE accounted for literally 6 of their top 10 sign-up days ever. Crazy, right? Second, ad revenue is projected to double to around $3 billion. And finally, they are aggressively deploying GenAI across over 300 titles right now to speed up post-production and seriously supercharge their ad targeting.
Let's zoom out to the broader sector for a minute. Despite totally dominating the financials, management openly acknowledges reality in their shareholder letter. They note that the entertainment industry remains relentlessly dynamic and competitive. So they aren't just resting on their laurels here. They know for a fact they have to rely on these technology upgrades and monetization pivots to stay ahead of some very deep-pocketed rivals. Which leaves us with the ultimate question for this explainer. As Netflix pivots away from just relying on raw subscriber counts and dives headfirst into live sports, advertising, and AI-driven efficiency, is this bold new playbook enough to maintain their crown in such a ruthless industry? Take these numbers, look at the strategy, and ask yourself, where is the ceiling for the king of streaming? Thanks for diving into the financial data with me today.